Good morning, traders. Welcome to the weekly Elliott Wave Street update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our wave counts. If you want to get the full wave count analysis on different instruments, please visit elliottwavestreet.com/membership, where you are going to find all the details about the memberships that we offer. We offer for Forex, for futures, and the stocks as well. All right, so let's start this week with dollar yen. Dollar yen has been fantastic. Last week we were able to sell dollar yen on the 110.05. So we went short at the 110.05 with a protective stop loss at the 110.35, so that's 30 pips, and a profit at the 108.50, and this trade is still active. So I want to talk about this trade. I want to show what I did. I want to share with you my risk management strategy. So let's talk about the setup. First of all, from the Elliott Wave point of view, Elliott Wave is going to provide the bias. So the plan is easy to have an ABC pattern. That's the ABC that we should focus. And we are at this level. So we still have a lot of room to the downside. Let's go to the lower time frames where we can watch what's going on inside. On the hourly chart, we are seeing the price gaining a bearish momentum, and I was able to sell the dollar yen at the 110.05. I actually sell it here at this area. The stop loss at the 35. Last Friday, price was able to move here without hitting the stop loss, so no problem. And then it accelerates down. At the 109.75, we have the 1-to-1 risk-reward ratio. So I risk 30 pips, this is my risk, to have at least 30 pips. So I have 1-to-1. What I do at this ratio is to take out half of the trade. So I risk, let's say, 1%. I'd like to risk less than 1%. So here I take out half of that trade, and it's going to become a risk-free trade, because right now it doesn't matter. If the price goes higher and hits the stop, I'm going to be at the break-even, so no problem. But we have a high probability, a huge probability that the dollar yen is going to give us this week the wave 3. So what if we haven't triggered the trade? What if we're looking for an entry? Is that possible? Or if I miss the trade at the 110.05, I can't trigger again? Yes, we can find another trigger. Let's go to the lower time frame, 15-minute chart. The plan is to have an irregular flat here on the dollar yen, where the price already shows a validation here. This is an entry. This is an entry for a day trade, actually, with just the stop loss here, so it takes out the trade, but that's the way to do it. And here, after this big candle, we're starting to see some small candles. That's good. So there are two ways to trigger the trade. One is, let's say that we have some sort of double top here and we can sell it. Or two, an easy and more objective way is to have a nice candle closing below the wave A, and that's the sell trade. So we can sell it here again, we can add to the position, or we can trigger for the first time with a risk above this high, that the risk should be 1% or 2% at the most, but no more than that. Be careful always with the risk, because not all the trades are going to work, or some trades are not going to work. And if you have a huge risk on that trade that doesn't work, then you're going to be in trouble. And that's it. First target here, or 1-to-1 to lock profits and to manage the trade, and then just follow this setup. Let's have a look at the S&P, and then we're going to check oil. Don't forget that you can sign up on elliottwavestreet.com to get these analysis every day in all the instruments that we cover with charts and videos. This is the S&P. The S&P is growing, and that's fantastic. Do you remember when I was talking about those levels when we were here? You can check the YouTube channel, back videos on the videos on those dates. I have been long from here. I have been accumulating the S&P from here, making some good profits, of course. So look where we are. It's true that it's expensive, the S&P. Last week on the weekly video, I was talking about that we have to be careful because this wave 4 is going to be activated at any moment. Not yet, not yet. But of course, the S&P is expensive and eventually is needing to have a retrace, for example, like this one, the one that we have before the pandemic. It eventually needs to give us a retrace. It's healthy for the trend, to eventually have a retrace. So coming to the lower time frames, this week I'm expecting higher highs. We are seeing the S&P crossing the 4,500 area, which is fantastic. We're seeing the price gaining momentum, and that's great. And we just need to follow the trend. But remember, when we are trading, we need to buy at the retrace. Today in the membership, I did a special video explaining how to trigger these trades, how to jump into the trade. So that's another reason to sign up for the membership, because you're going to learn how to trigger those trades. And the price is accelerating, and we are not going to buy here, of course, right? It's too expensive, but just following the trend. Let's have a look at the oil. Oil is going to give us a nice opportunity this week if we have an ABC and the price rejects the low, right? If the price starts bouncing and moving above, this is A, this is B, and this is C. If the price moves above wave A, that's going to be my buy trade. This will be the risk, some points below the low that we have at that moment. We don't know that yet. And the target will be here, right? And all this extra will be fine. If we can capture more, great. Now, if and once, better the price finished, the C wave, I'm going to sell it. I'm going to sell it because I want to target the 50s or the 40s on the oil. So I'm planning a big swing trade on the oil. This is just a little trade. They want to buy the oil if we have the ABC. But once we have the C wave up, I'm going to sell it. That's another benefit of using the Elliott wave theory, because you can plan your trades. If you are swing trading from days before, if you are day trading or scalping from the previous day or from hours before, you can plan the setups that you are going to look for during the session. So this gives you an additional advantage, because you are going to have enough time to plan and to think, how will you like to see the setup, and not just going crazy on a scalping scenario trying to take everything, because you're going to lose a lot of money. So the Elliott wave theory has so many benefits that it helps to have better trades, of course, but more than that, to understand what we are doing. Traders, that's the plan for the week. Please sign up on elliottwavestreet.com/membership and start your membership right away. You are going to get your username and password. Here on elliottwavestreet.com, you're going to visit the membership tab, and there you're going to find all the plans that we have for you. We have the Forex, the stocks, or the full access with all these instruments updated every day, Monday to Friday, and you will get immediate access to the system. Please have a fantastic trading session. I'll see you inside the membership. Take care. Bye-bye.